Almost 2 weeks ago, we heard about what will become the largest leveraged buyout ever. Electronic Arts has agreed to be acquired in a $55 billion all-cash leveraged buyout led by a consortium of investors including Saudi Arabia's Public Investment Fund, I'll refer to them as PIF, American private equity fund Silver Lake, and Jared Kushner's investment firm Affinity Partners. Hello everyone. Today we will be covering the EA buyout, PIF and their consistent moves amongst the gaming industry, and what this means for us as consumers in the gaming industry. We've got a lot to uncover. The deal has been approved by EA's board and is expected to close in fiscal Q1 of 2027 pending regulatory and shareholder approvals. After closing, EA will no longer be publicly traded and will be run as a private company, and the CEO of EA, Andrew Wilson, will stay in place after the deal closes. Now, I mentioned it will be the largest leveraged buyout ever. But what is a leveraged buyout? So a leveraged buyout is when an investor, often a private equity firm or investment group, buys a company mostly using borrowed money, in this case debt, rather than paying entirely in cash or equity. In other words, they use the company's own assets and future profits to pay for buying it. A leveraged buyout is structured because there are typically higher returns for investors by using debt. They invest less of their own money upfront but still own 100% of the company. So if EA's value grows, their return on investment skyrockets. The investors get ownership and control without spending the full amount of cash. Of course, this is still a gamble. If EA was to lose money rather than grow and make profit, the investors and EA are both losers. But what could this buyout mean for us? So, the buyout is financed with about $36 billion in equity from the investors and $20 billion in debt arranged by JP Morgan. Let's talk about that debt. Once the deal closes, that debt doesn't sit with the private equity firms. It sits on EA's balance sheet. EA will now need to service that debt, interest and principal repayments, with its own cash flows, which could eat into budgets for research and development, acquisitions, or risky creative bets. Other leveraged buyouts in a similar situation are normally followed by money-saving efforts. Because of this, EA may need to consolidate studios or merge smaller teams into bigger ones. And if you guessed it, we might see another wave of layoffs and studios shutting down. They might scale back on some of their projects and rely more heavily on their proven products, like their annual sports releases Apex Legends and The Sims. And this has particular fans worried. Those who are fans of BioWare, to be precise. BioWare worked on games like the Mass Effect trilogy, Baldur's Gate series, and the Dragon Age series. These games were a massive hit at the time, but they haven't had a major hit in some time. Dragon Age: The Veilguard came out last year, but they underperformed financial expectations. And if we all remember the bust of Anthem, that game was a major commercial failure. BioWare is at a very interesting crossroads when it comes to this buyout situation. If BioWare's next game flops, there are 3 pits they could fall into. 1, they could face cuts and layoffs. These investors are the new owners of EA. They are going to want to see strong cash flow. A studio that doesn't bring large returns on investments with their long dev cycles become targets for these cuts and layoffs because they are making themselves a cost liability. 2, EA could possibly consolidate or sell them off. If EA wants to, they could merge BioWare into a bigger or more successful studio like Motive or Respawn to save on overhead and have more creative minds working on their more successful products. They could start selling BioWare to other companies like Tencent or NetEase if they wanted to offload debt. Or 3, this would be about salvaging the brand, leaving studio loyalty behind. EA would certainly keep the IPs for Mass Effect and Dragon Age because the brand would still be considered valuable even if BioWare isn't. They'll be able to assign these franchises to other studios to work on while they say goodbye to BioWare. In short, under this debt-heavy buyout, failure isn't disappointing, it becomes financially intolerable. If BioWare's next game succeeds, let's say in strong sales, great reviews, and good live service tale, it could ease the pressure from lenders and help them prove they are still capable of delivering AAA magic. But, as we have seen with the success of The Final Shape and Destiny 2 for Bungie, success doesn't guarantee safety of their employees. If in this environment, the investors question whether this game could be made cheaper or faster, they could restructure the team or possibly downsize them altogether. But to me, BioWare needs to bank on this next game to be a success in order for them to stay. It doesn't matter what it takes. If it's not successful, I can see their time at EA coming to an end. Although it may appear good that coming off of Wall Street will avoid meeting quarterly results, this debt creates a new pressure for the company, and until they are able to meet the return on investment that these private equity investors expect in a few years, we may not see much risks in new projects being taken by EA. Now let's focus our attention on Saudi Arabia's Public Investment Fund. PIF established the Savvy Games Group back in 2021 with the goal to bring economic diversification and social transformation to Saudi Arabia. The Crown Prince of Saudi Arabia, Mohammed bin Salman, is a big gamer and serves as the PIF's chairman. Salman is an enthusiast in the gaming industry and hopes to invest in the growing industry. The PIF is expecting to see the gaming industry revenues top $300 billion in 2028. In the past 5 years, PIF has been building a global gaming empire. They have been investing heavily into esports, where they want to make Riyadh, I hope I'm saying that right, a global tournament hub. The Gamers 8 Festival, or also known as the Esports World Cup, is held here, which is a tournament that lasts roughly 2 months or around 8 weeks, hence the name, Gamers 8. And if you didn't know, esports is not a profitable industry. In the past few years, esports has grown and the fans love it. Players and teams got stronger, but the profit is non-existent. Unless you're an organization that wins most of the tournaments, most organizations are bleeding money. Someone in the scene that has spoken about it best is Penguin Zero and Ludwig. They have both addressed the unprofitability, while Charlie stating he ran his team Moist Esports at a significant loss. The reason they stay in the scene is because they view this as a passion project, rather for unique opportunities in content and the love of the industry. Under PIF, their investment in esports is also not yet profitable, but that is because their focus is on long-term growth and strategic influence rather than the immediate returns. PIF sees this as both a youth engagement tool and a way to diversify Saudi's economy beyond oil. The oil industry accounts for approximately 40% of the country's gross domestic product, according to PIF. So their goal is to diversify Saudi Arabia's economy into new areas, including tourism, entertainment, and technology. They are planning on the future of Saudi Arabia for the post-peak oil world. While they have yet to make profit, they have generated significant revenue and lots of growth. Through their Savvy Games Group, they have attained the largest esports company in the world, ESL Faceit Group. EA fits into this strategy because controlling EA means you have access to massive IPs with esports potential. Some of EA's games are already performing in the esports leagues, such as Madden NFL and Apex Legends. Saudi Arabia has one of the youngest gaming populations in the world, which gives them leverage in the Middle Eastern market for growth, where both esports and gaming are demographically booming. PIF isn't just passively investing, they're building a vertically integrated gaming empire, from publishing to esports tournaments and infrastructure. Their EA move isn't just random, it plugs directly into their 2030 vision plan to make Saudi Arabia a global gaming and esports powerhouse. You know, for all the noise around this buyout, the numbers, the debt, the investors, there's actually a silver lining here that gives me a bit of hope. When a company like EA goes private, it suddenly loses one of the biggest creative shackles: Wall Street. No more quarterly earnings calls where every new game idea has to justify itself to investors who only care about short-term profits. No more panic when a single title underperforms because it might shave 2% off the stock price. Going private means EA can start thinking long-term again. They can take risks. They can give studios like Motive and Respawn the breathing room to build worlds instead of just shipping features on a fiscal calendar. And yeah, without that constant pressure to chase investor trends or tick every marketing checkbox, maybe we'll see EA rediscover what it used to do best: make great games that people actually want to play. It's easy to be cynical, but if this buyout really gives developers more time, fewer corporate distractions, and a chance to focus on creativity over quarterly targets, then maybe, just maybe, EA's best days aren't behind them. Plus, if they are successful in this move and can rebuild trust and bring players back to who left them long ago, it's possible other companies will follow suit. It always takes a leader for others to follow. But if EA cannot act and benefit off this move, then other companies will probably steer clear from making a move like this themselves. It's also easy to say that EA is not a well-received company in the gaming industry, along with Activision, Blizzard, and Microsoft. But nobody's going to top Ubisoft in that category. I believe the future of gaming resides in going private, where there are no extra voices talking in the background. Of course, this is just my hope. I think everyone can agree Wall Street ruins games. But that can be said in almost any industry. We have seen countless times in recent successes for games of smaller studios that could follow their own schedule and build upon the vision they had for their projects, their portrayal of art in the gaming industry. With extra voices from Wall Street, the talents behind these developers slowly get snuffed out because they aren't meeting their investors' expectations. The other thing to note is that EA is already a profitable company. Investors aren't going to take risks on a company that is known for losing money. In the last 3 years, EA averaged $1.065 billion in net income. So in the long run, they will be able to settle this debt. It's also why we got such a polished gem of Battlefield 6. It seems like they went all out for this game to help convince investors that this deal is worth following through. I mean, deals like this aren't just established overnight, it takes months, even a few years to follow through, which is why they banked so much on getting eyes on the beta, which was a success. There are now debates on whether COD or Battlefield is better, but honestly those debates have been here a long time. They're just resurfaced. Debates on whether you should get one game over the other, but what stuck out to me is that it seems like people are leaning more on the Battlefield side, because COD was so concerned they dialed back their unrealistic looking skins, took out SBMM, and brought back persistent lobbies in response to loss of loyalty. And they should be concerned, because I am writing this a day after the release of Battlefield 6, and it took an hour to obliterate COD's all-time peak player count on Steam by over 200,000. But that's just Steam. That doesn't include all of the other platforms that players can boot it up from, and how many probably outpaced COD there. Anyway, that's where things stand right now. The biggest buyout in gaming history is in motion, and we're all just along for the ride. But what do you think? Will EA use this opportunity to get back to its creative roots, or will it be a failed move? I am hopeful of this situation and think this will be good, but I will wait and see and not get my hopes too high. Let me know your thoughts in the comments below, and if you enjoyed this breakdown, you might like this video about the Game Pass price hike. Don't forget to like and subscribe, and I'll see you in the next one when we hear more about how this deal unfolds in the coming months. Thanks for watching. Peace.